Hi there, guys. Thought I'll just start talking. Hope you're all well. A happy, what was it? Merry Christmas and Happy New Year. Welcome to 2019. Good little start to the year. Looks like I spelt your name too wrong, Lauren. Hope we're going well, Gino and Peter. We had a good break also. It's a good time just to kick the feet up. Looks like there was a few missed opportunities though, Chrissy, which is a shame. Let me know if you can hear me, just to make sure my system, it's been in hibernation for a few weeks. It's all ready and raring, right to go. And we'll get started. Back into my usual coffee while I'm talking. Coming through loud and clear there, guys. Okay. Perfect. Thanks, Peter. Might be just a bit of a delay, that's all. We're going to bear that in mind. All right, guys, thanks very much for joining me. Anyone that joins later on, welcome. We might get a few new ones. Sharon, how are you going? Welcome to TradeSetup in the live stream, the first for the new year in 2019. Just remember, we're only giving general advice when we're talking about anything in the forum here. Anything I may say is just my own personal opinion, so I can make sure I spew that out. Now we've got the top left-hand corner, you'll see Twitter. That's our Twitter feed there, so link into us there. Facebook on the right. Bottom right, subscribe to us at YouTube. What is it? At TradeSetup, capital AU. You can find us there. All right, guys, a bit to talk about today. I might be a bit rusty. I've been talking to too many people, apart from my wife and my kids, the last 2 weeks. So I might either talk like a child or just talk a bit strange or lovingly, I like to say. Now we'll look at, obviously, we'll get over the charts for the markets, like looking at the Dow, the US, what's happening over there. I'm probably not up to scratch on the news just at the moment, but from what I've read the last few days, I was following a bit on the holiday, but I like to disconnect a bit, disconnect over the holidays just to freshen your mind, enjoy, relax, and then restart, with a bit of a bang. Otherwise, you get a bit stale after a while. Then again, every now and then I'll flick in the computer on looking at charts. You just can't help it. Looking at things. So I might not be up to scratch with the news, but I think from what I've read, there's been a few things happening on the US-China front, so that's sort of easing the concerns a bit. Although although they're talking it up a bit, I don't know if there's too much being said what has been agreed upon. So I think the market's sort of waiting for that at the moment. Still got an eye on copper prices for that because I think they're well oversold and stockpiles are reducing. What do you call it? Physical stockpiles are reducing, which means it should be upward pressure on the price, which it just hasn't happened because of all the trade war. So I still like that, and if that starts to come out and they get some form of deal negotiated, then you'd think copper could be a good benefactor of that. And probably, right across the board with commodities, which could be good for 2019 into commodities, especially looking at the small caps that we look at. Also, so what else has happened over there? US interest rates, I think they're flicking between bullish on it and bearish on it, but I think the market the US did raise interest rates in December, and they were talking it up the last I heard and last I read into end of last year was they're talking two more this year. But I think his commentary keeps flicking around. This is what's not concerning for people, but a lot of people are looking at the Fed chairs. Was it Powell? His commentary that's coming out, some is what they call dovish, which is a bit easy, relaxed to more hawkish. I might go the other way around. Sorry, dovish is more sort of bullish on interest rates and the economy, but I think the economy is well contained. So I don't know if the market's actually factoring in another two this year or not. They seem to have probably eased off on it on the US dollar. The US dollar's still choppy, bounced overnight. The night before was down. So it's still, from what I see, it's sort of banging around there, which is obviously affecting our markets in general, especially the Aussie dollar. I think that little mini crash, little mini meltdown in the Aussie dollar recently. So that was interesting to see. But I think it's back up there anyway. What else? Sorry, is that a phone call? Phone call coming through. All right. Sorry, guys, just had a phone call coming through. Might have cut me out for a second. Um, so the interest rates, I think that's not going to be too much of a concern going forward, even though that talk up and down. It might whip around the market a bit, but I think generally they're going to be contained. I think they're pretty much normalised at the moment, where inflation is not getting out of hand. It's about where they want it. So if any sort of they get a spate of strong numbers over there in the US, strong economic numbers, then they might be looking at another rate rise, and then maybe another one by the end of the year. Otherwise, they'll probably just hold off, which should be fairly good for equities. But also, um, this week starting, the banks kick off soon is earnings in the US, and because the market's been hammered, I think there's a lot that, and they've been projecting lower than expected earnings, which being factored in, the market could get a bit of a lift if some come out and beat expectations, or they project better than going forward, going towards the end of the year or during the year, better earnings because of where the market's pushed to over this pullback, this big pullback. So I think that could be a bit supportive of the market overall, but we'll have to see. We have to wait and see. Let's get into some charts and see what we've got. Not sure whether I'll go here or just go over here a bit. Still rusty on this system too. How have we all gone at the start of the year? A bit of action, and there's a few out there that have been doing okay. So we'll start off with just what's happening over in the US, and then we'll look at our charts. Don't worry about that. This is the Dow. Now, I'm obviously, I guess there's a few people. We've had a good, obviously a good bounce. We've got smashed into the end of December, smashed into sort of Christmas, bounced the last few days of the year, and then, continued to bounce in the start of this year. It is getting top heavy on the Dow, and you could view this too. I mean, it could creep higher. It could just keep creeping higher. But I'm not a big believer in markets that just turn around on the dime like that. Maybe it got overextended on a thin market. Coming into Christmas, it was pushed lower because it was a thinner market. And again, look, it could have bounced harder than normal, being a thin market too. So you can look at it from both sides of the coin there. So yeah, we'll just have to see if this is. I do think it's heavy up here. It's getting a bit heavy. This is the daily chart. If we get onto the weekly, you can see that it has extended quite hard and really through that key level just above 23,000, and it's bounced straight back above that. It's probably testing that breakout level around the 24,000 at the moment, 5 points below, finished last night. It's not a key level by any means, but generally, market can extend and then pull back to test that breakout level on the upside and the downside. And that's about where it is now. So if you couple that weekly with the daily, where we could be, the moving averages still, they've come in a bit, but they're still well and truly on the downside. We could have a bit of a pullback. Now, that's what I'm expecting, is a pullback from here, from this rally, but it doesn't mean we're going to capitulate. We have to take the market as it comes. By saying that, I mean that this market's popped up here. Let's just draw it. So we've got the market's come down, we've extended, and we've come right back up into about where we are now. I don't think if we do head down, whether or not we take out this low, that's the key thing we'd be concerned about, because that'll be continuation. That could really lead to some more selling if we push through there and really start to extend that weekly chart on the way down. But if we sort of fall short, then we look in maybe the market start putting a bit of a base and a major high low, and then from there it's just really measuring that leg up. How come that didn't come out right? Measuring that leg up and extrapolate. That's not even working well, is it? Oh, it doesn't want to change, doesn't it? Well, it's good to know that I'm having a problem. There we go. That looks better. Whether we're going to extend what's going on here. Anyway, from here and sort of bring it right back into sort of that key anchor level, which is sort of towards 26,000. So that's what ideally I'd be looking for. I'd be looking for that high low. Now, if that plays out, I think we can get a good little run. There's obviously in the ASX, in the US too, there'll be a lot of stocks that have been overextending on the downside, which are starting to show some signs, but I don't think they're showing technically some really good buy signals just yet. I think that's because the market's due for a pullback, and then from here, if we start, especially if we can take all that back, so the market's pressed down, we've come down and we've pressed up, so that's here. If we just edge lower, that for me is a good sign, and you edge lower, but you're edging into a zone where it's going to be a higher low. I like that kind of price action rather than where it's just compete straight down. If we come straight down here, I'll be nervous that we could do this, build another lower high and just continue on lower. But I like to see that it's sort of this scenario where you're edging lower is more buyers on the way down, just building positions, or bigger fundies or whatever are starting to see a bit of value in there and are happy to buy into it. There's also the selling's running out. We've got to remember a lot of this move down, this earlier move down from the highs around 27, has taken a lot of selling pressure out of the market. Anyone who's probably sold has had a lot of time to think about it, especially this capitulation here that's really just dropped off the side of a cliff from about 24,750 down to 22. So that's a couple of thousand points, 2,500 points, nearly 3,000 points, probably closer to 3,000. Oh, pretty much spot on there, isn't it? 3,000 point drop over the period of a few days. That's a hammering. So that's if you are holding, you're long here, you rode through this, you got this lower high, you rode through, we're touching on the lows, then we built another lower high. That's a good, a really strong signal. And then you've got this pop through. I know it closed back above that support zone, 324 at 250, but then we stalled about the MA. So that's a perfect sell signal. So if you were holding all through this pain, if you bought it late, you've been squeezed out. So I think a lot of this, any selling that's been done or wanting any fuel on the downside has probably come out of the market, I would expect. So that's why I'm leaning towards this scenario where we can build the higher low, uh, especially if we see this kind of price action, because that's weak selling pressure. This kind of price action would be, to me, weaker selling pressure than something just straight down into that support zone, especially. So ideally, we've got a bit to watch out for. I wouldn't expect this just to keep ticking on higher. I know anything's possible, and if you do, again, at this stage, this is where the market was probably back here when it was just creeping higher. When everyone, again, all the bears were talking up, a roll over. Anytime here, we're into all-time highs, da da da. But it just didn't happen until start of October. We could do something similar, a minor little pullback of say a couple of hundred points, and then just keep gradually edging higher, and rather be vertical, near vertical, a bit more controlled. Whereas the ascent, the steepness or the gradient of the ascent is a lot less steep than this earlier bounce. And that earlier bounce, I mean, you could attribute it to a few things. A thin market's pushed it lower than expected, and a thin market's brought it straight back up again to where probably fair value. But again, we've got a lot to watch for, I think, for now. I wouldn't be buying here in particular, but there's something to be said also, like I was saying at this stage here, if you're looking at this stage and okay, we're getting a bit overcooked about here, and we, a couple of red candles here, the market's probably going to top over, a lot of bears talking it up a bit. But if you do get a good quality setup on an individual stock, you're probably still going to honor it and buy into it, if that makes sense. It may not. I wouldn't say they come if you've got a good solid setup on a stock that's continuation or weekly trends up, the daily trends up, the daily's giving you a really solid entry. By solid, I don't mean into stretch conditions. I mean a nice solid. It's had your weekly press higher. Let me just get rid of all this. I'll tell you what I'm talking about. Second all, there we are. So if the market's pressed up, and this is your weekly contraction we're looking for to build a weekly higher low, and then you flick it down to your daily and you get a nice setup that's something like that. I think you've got to honor it because it's in a great position on the weekly. Everything's setting up. We get our higher low here, maybe on our weekly, and we're looking down to the daily to refine our entry. That's a continuation pattern. So that's meaning you're taking from low to high, you're getting your projected trade could be 3 or 4 to 1. Then I think even if the market's looking a bit stretched, and this is applying to the Aussie market as well, you probably still got to honor it, but not very high quality setups. If you're getting something that is not so high quality, not a high probability setup, then I would steer clear of that in these stretch conditions, and I would be waiting for that weekly high low to build. So I think even if you get a good setup and the market rolls over, it doesn't mean that that stock is going to come down. It could just go sideways. It could even creep higher. I think when the market was rolling over, falling over, we only had a few stocks and they were still going up and the market was rolling over. You get the big down days, they may not do anything, but then you get other days when the market's sort of not as bad on the full ASX and our stocks are actually going up. So over that period of time when the market was rolling over, we had a couple that were just creeping up, edging up. And that's what ultimately you want. And that's by really drilling down to your higher probability setups, only taking your high probability setups when the overall market's like this. But also, keeping not all your bullets into the market, keeping a lot dry, a lot of ammunition dry, ready for when the market is setting up. If we do get that pullback, I'm not saying we are, but just in case we do get that pullback and that high low starting to build on the weekly charts, a bit of a pullback, this is the low put in place. That's a good corrective action. And then if we start getting the market running out of steam, say at 22,500, and starting to build, putting in a lot of groundwork, to build that base, then you can look for a lot better setup. And I think you'll start getting a lot more setups start popping up too, because there'll be a lot of stocks that need to do a bit of work as well. And I'll probably go hand in hand. So that's the Dow. I'd say the FTSE's, sorry, where are we? The S&P is about the same. Yeah, same sort of scenario in the S&P. I think our market's not probably quite as heavily sold off, but I think we did a lot of our work earlier on. And we tend to do that in the ASX. We're a lot less aggressive than the US, whereas you can see at this stage, the US was more chopping around here. They had that sell off and then dropped off the side of a cliff. We did it a bit earlier and then didn't sell down as hard when the US was getting hammered. Although we did roll over quite heavily. But compared to that original sell, we pushed down, grinded up, and then got hammered down to a few hundred points from 62 to about 600 points there. So that's a fairly hefty move lower. So yeah, this to me, similar type of thing. We're touching on those MAs. MAs are rolled over. So for me, we'd want to be looking at that high low to really get that confidence to start buying back into the market. We could do something like this. We roll over here and press straight back up through the MAs and sticking to the MAs. You've got maybe opportunity here, and then we sort of stuck through, spent a lot of time just holding that level back in, was it 2017, and then started to lift again. But I think it's got a fair bit of work to do. We're not so overbought on we're nowhere near it on the week. We've just come off that sort of oversold zone, but again, that daily zone, if you're buying it up here off the daily charts, I think you've got to, your risk management's got to be spot on. Not to say it can't keep creeping higher, but the key levels for me is sort of up through that 59.50. We haven't quite broken out of that resistance zone. If we draw that up, let me just see if we can draw that up. I just want to see something if we actually, so we're pretty much right there now. Oh, works now. So you can see we're about there now. We've just popped our head up, touching on that 58 area. We're just coming out of correction, but it's taken us a lot of effort to get up, in 2 moves to get up from oversold to overbought. We're running out of steam. I would suggest we're running out of steam here. So I think what the market needs to do is have a bit of a pullback, start building that higher low. And if we can, just clean out a few of these late buys, especially on that secondary leg up from 55.50 to 58. That secondary leg up at the start of the year, pretty much wash out those traders, put them back on the sidelines, and then start to hold that high low. You probably get a lot more people start to edge into the market and see if we can get that kick up through 58 and get that little rally. And I think that'll go in conjunction with what the US is doing there. That's probably all we need to chat about. Any questions there, guys? Anyone have any different opinions? I know a lot of the guys in the forum are not obviously still in cash. A few started to edge into a couple of positions. We haven't got anything on just because I've been away from the screens for a few weeks, but also I was flicking through quite a bit today and I didn't see anything that's really taken my fancy. There's a few lower, smaller, really small stocks that are moving, but nothing to me that's setting up is looking too clear cut. We get a lot of this stuff that's the market's moved down. So I think a lot of stocks have got some work cut out, some work to do before they start building, and they've got to build the traders' confidence after getting these markets that are rolled over. You've got, especially this one, what are we talking about? TOP. Spent a lot of time doing nothing, and then the market's got sold off. It's got having a good excuse for this one, especially because it went sideways for a good couple of years and then gave up the ghost. Now we're below the MAs. We could be reversion to the mean, reversion to the MAs, and then selling a bit heavier. So there's a few stocks that have, if you just flick through, potentially on the weekly, they're at a zone where they could be building a higher low. Doesn't mean they are. Old SAS, SLR. I mean, look at this one, for instance. For me, I like, I don't mind SLR, Silver Lake, at all. But you can see just going from left to right, this is the weekly chart, don't forget. So for the weekly chart, they're putting a bit of effort. I think it's got to bang around here, spend a couple of candles, which would be a few weeks, maybe a month, of just holding around that 54, 55, 53 area, and then starting to lift. And if we can get that action on the daily, which we can look at, then this one could be pretty good. But I don't think the daily, we're sort of stretched up here around at 60. So I think this little pullback is maybe not enough because we're looking at that weekly. This little pullback and then expecting to go straight up and through 60 to 70 is probably a big ask. So I think it's got a bit more work to do. But that overall chart, they got leg up, good pullback, this pop up. Then we spent a lot of time sort of consolidating through about, what was it, early 2018 till now, and holding a higher level at 45 cents. It's not confirmed until you break up through these highs. But looking at that, for me, that pullback here, lower high, pressed down into that zone again at 45, held up nicely. That's a higher low compared to that 30 to 35 cent zone. So it's got the makings of building, but I think this has still got some work cut out, some work to do. Does that make sense? So I'm seeing a few like not can I think could potentially roll over again. It's more the weekly charts that I've been flicking through lately. AMI is another one we're looking at, but I think with this, I don't mind this one at all. It's done a lot of work while the market was getting, knocked around a bit, say, looking back at October. Sell off, holding up, sell off. So that was more sideways. That's more consolidation to me than a good pullback. And I think if we can start getting some daily, rather than these big, falls through the MAs, holding up above the MA, and then getting some high lows starting to build, I think AMI could be a good one to keep an eye on. Cash converters, you can forget about that. That's just been a horrible little one, hasn't it? So yeah, it's worth just flicking through some weekly charts just to build a bit of a list on a weekly. Haven't seen this one. It's only done 33 grand, so 35 grand thereabouts. Not doing too much. But flicking through some of the weekly charts just to build a bit of a list where, you could be in a nice zone on the weekly, but it's got some work to do. And if this market starts going through a bit of a pullback phase, it might getting a bit choppy with some of these stocks where they're in a weekly zone, choppy rather than pullback. You don't want to be looking at something that's on a high, it's been trending high in a weekly, it's just popped up and you buy into it off the daily setup, and then all of a sudden you get big pullback on the weekly. The daily and the weekly, you want something that's already pulled back. If there is a bit of a pullback in the overall market, and it does play out like we expect to build that high low, they're going to be the ones that are going to start to build really nicely. All right, start chucking some, just put some codes into the market, into the chat there, guys, and then we'll start going through. we'll start with Lawrence there. I'm just flicking through some now. If there's anything you desperately got some questions about, yeah, just put it into the chat too. What's this here? Net wealth. Net wealth looking a bit negative. If anyone can see what I'm saying, if you go back to the weekly, look at this. It's had that little drive up, tried to go again. That was back in July 2018. It was last year, was it? Okay. 2018, it couldn't get up through the highs, which is through 10 bucks. It had to have a deeper correction. Tried to go again and couldn't do it. So it's had a couple of goes to take out this high at 10 bucks. Couldn't do it. And then you can see this sort of selling. It wasn't too bad. Washed out the previous low here. Started to build up again, but then it's running out of steam around 850. So each time it's taken lower highs in place. And if you just, this to me looks like potentially there's going to be a certain time when, if you're holding it through here, if you're a longer term, you bought it way back when it was here, and you've sat through all this, a good part of half a year to a year, you sat through this. There's going to be some people going to get jack of it sooner or later, especially if the market rolls over and they're getting a bit tentative. So flick it down to the daily. This is the same price action. Go here, couldn't get up there. Another go here, another lower high, then had a bit of a sell off here. We're struggling at the MAs right here, so that to me could be a potential short. Rolling through. If you're shorting that through the lower 719, for example, and you stop just above here, you don't want to risk too much on it. This could at least, if it's going to continue that trend, take out this low at 675, and then you probably got a 1-to-1 at least, potentially more. And if we get that capitulation, you could be looking towards $6. So that there could be a bit of a goer on the downside. It doesn't look positive to me. All right, let's go over here. We'll get into some other charts. A2M. So that's what I want to talk about, this one, because I think the weekly, this price action from the weekly is not looking too bad. You can start to see it looks like it's curling. If we can draw that up, there we go. By curling, I mean it's starting to potentially. Oh, my mouse. Let's get my mouse better. There we go. It's starting to curl up here. I don't think so. You got a bit of ahead of itself, and then we had this bit of a pullback here, pop up, pullback. Tried to get up here, and that's just really cleaning out a few more longs. I think there wasn't enough selling pressure done by then to expect it to come up and take out these highs. I think a bit more selling's coming to the market, but this price action here, you can look at it either way. Okay, I'm probably turning negative on it. I think we've taken, we've come down to what, $8 from, which has pretty much taken out this big rally here, initial thrust up, and then which we've been selling off from there since. It's looking good, but I still think we need to test some lows. We need to hold, for me, a decent higher low above $8 to be bullish on this one. And that's because it's really this move up here that can be concerned of. Don't forget we've come from way down. We started looking at this below $1 somewhere. We've been buying it a few times, and then this obviously missed this big move up here, this thrust higher, but it is, we are talking the stock that's up near 11, 12, expecting to get up through, buying it and getting up through 14, maybe big effort. You don't know. I'm not one into those valuations and undervalued, overvalued, all that sort of stuff. It's purely for me is looking at the charts at the moment, and then getting a bit of a grip onto what the charts are saying, and then drilling down to see if there's anything standing out on the fundamental side. As you probably know, it's not something I'm very, very good at. So looking at that, it's a bit like the ASX. It's just popping its head up. I still think, if we can do that and grind a bit, say maybe just through 11, and then go into pullback mode, I think that's going to be the stage where we build that higher low. I don't know where we're going to go to, but I want to see, price action that's, because it's just go down to the daily. Just want to draw that up. That mouse is running out of battery. It's good timing. That sort of rally through here. Oh, what are you doing now? Rally through there hasn't been too. You can see I know they're only minor rallies, but the rally before that was kind of more vertical than what we're seeing here. We're seeing any sort of pop up, then we get some selling in and pop up, pop up, selling, pop up, selling. Come on, come on. Sorry guys, my mouse is starting to play up. Let me just do something. Let me just see if, oh, great. All right, bear with me a second there, guys. Got cheap batteries, they don't last long. So if there's new ones, here we go, there we go. Rocking and rolling now. A couple of mouses here. Well, there we go. So you can see, like I said, this move up has been fairly contained, and if we're talking, this is the anchor up here at 1175. I'm not too convinced on this. This is going to take up and start to really kick off. Well, look, it may or may not. I just think it's going to have a bit of a pullback, clean out a few buyers, build the higher low, and then start putting the groundwork potentially around that zone. It was around that 950 zone. We'll be up towards $10. It could easily do that. I'm not too convinced just because of this price action. And we have, the last couple of rallies, this was a bit more, people buying, they were eager here, they were eager here. They're not so eager in here. It looks like we're just running out of buying, and maybe that's a function of the overall market being a bit more negative. It has been going up sort of against the overall bias of the market, the ASX and the Dow and the global market. It has been doing quite well, but maybe that's why it's been contained. I would just prefer, like I said, to pop up here, maybe through 11, and then go into that pullback, build your high low, and then start to get a bit of a run on. I think that's going to drag in a lot more buyers and really start to power ahead. I always like those ones that, they clean out a few of these buyers, especially the buyers late through November, December, and the start of the year. If they can clean out a few there, they get a bit antsy because they think it could roll over and take out this low. Clean them out, stall, build that higher low, build some nice price action. You get a whole lot of buyers start piling in to support that action at a higher low, especially after we break up, out of this contraction lower. You can see this is what I mean by contraction. It's just holding lower highs, break up, break that sort of trend, and then go into building a key higher low. And I think that's going to drag in some more buyers, but we'll see how we go. Enough of that one. What's we got? A2M TGR. Good work, Lauren. I've been watching this one too. I think we're a bit overcooked up at these highs, and considering the overall market, the ASX is getting stretched. The way I'm viewing it, the overall market is getting stretched at current levels. What are we now? 57.73, and we just dropped off about 15 points, by the way. I think before we were talking we're up 15. Now we're pretty much break even to down 1. So this is getting stretched. You can see the stochastics, the pressure buying. It seems to be running out of steam here. And that sell-off when we last were running out of steam back in December, good sell-off. Held a high level, that was good. Started to lift again. We're getting into a zone where you would expect a bit of a reaction up towards 460, 465. You would expect that. So, and we're stretched. So it's a big ask to say, if I bought this now, I'm just going to blast up and through and I don't have to worry about it, don't have to take any heat. I think it's going to be a big ask for that. And I think to take some heat, if you're buying here, your stop would naturally have to be about 415. Now, percentage terms, it's probably quite a chunk. Otherwise, you're going to have to hold it below the last couple of days, maybe below 440, just to reduce your risk. I know there's a lot of people that wouldn't trade like that. That's the way I would trade it. Only because I'm happy to take a hit on that, and I wouldn't put it there anyway. I wouldn't honestly put it below, say, 440, even below this 430 level, just because we've got a red candle. I think this is a key level around 415. So to put it there, I think it's the right way to do it. It could go pull back, do the same thing, hold a higher level, and go back up again. And if you put your stop a bit high, you can get washed out, and you could still be right. Does that make sense? So that's what I'd be looking for on TGR. I just think it's getting a bit stretched up here. So I'd rather see a reaction lower and then see what it does. If it can build an entry for me there off the daily, then I think it could be on. And the weekly is actually, I think, what Lauren's looking at too, is this is probably, I want to just make sure I've got the whole chart. There we go. So you've got level, a big level up through here. I wouldn't necessarily look at that too much. You probably got to, you can say that it's sort of contracting lower. You got a key level up towards that $4.95 zone, and then what you've got a low here put in place. You've got this, level's been tested once, not really as an inside level, blasted through there, but tested that same zone at 350 again before we started lifting. Took out this, so this rally here has taken out, a good lower high, so potentially changing the bias there. Now, if we're going to hold and just keep chopping around, you would have expected it to edge its way down to potentially 350 again. But instead, it's come down, and you can see it did in a couple of moves too. And then this zone through here around the 405 was holding. Okay, and we started to lift off that 405. So that could potentially be a higher low on the weekly, which is what you want to see. But I just think it hasn't on the weekly. You wouldn't trade it. You'd have to trade it on the breakout of say 470 with your, if you're trading, the way I do anyway. Breakout there with your stop below, and that again, that's even bigger than your daily stop. Stop below that $4 zone. Oh yeah, it's obviously too much to risk. That's why you're drilling down to your daily to refine your entries, but you want to buy it when the weekly's rising at least. Now I think that weekly it could stall around 460. You never know. Up, and that again, that matches off with the daily charts being extended up at that zone, and the weekly getting extended here, failing, coming down, and then we'll see if it can actually hold a higher low again on the weekly. And that's probably looking for this daily trend, taking a support zone from that low, taking across potentially 430, 435. It can pull back there. They'd start to see some buying stepping up. That could be a goodie. Triple T. Triple T does nothing today, has it? Doesn't look too good. Any questions on TGR? What's going on there? It hasn't even traded today. It's a bit unusual. So Triple T, it's the only alert we got going at the moment. We took a partial at 239. Now I've got to remember it's 201. We bought on this little break here that popped through. Took a bit of heat there for a while. And then we took that partial at 239. So I think our stop is just below 2. Close enough to break even on the second half. So either way, we're going to be up on this this alert. I'd just like it to be up more than what it is, just because I'm greedy. But I think this isn't a key area, a key zone to just bounce off those MAs to hold this level around the 225 mark, 222, 2023. What are we now, 223 to 4? Hold here and start to lift again. Now, if we start to fail, sooner or later, because it's creeping up since October, it hasn't been anything like this. That's ideally what you want to see, just go on one day after another. And that's where, those trades there are just happy days. You don't have to worry about them. But when you've got this grind up, you're getting up into those highs, that's starting to say, for me anyway, I start to look at that as getting a bit extended. Potentially it's had enough. If there wasn't any selling there, you wouldn't get this kind of price action. You get more of this, eager buyers jumping into the market. They're just hitting the offer, smacking it up and chasing the market higher. Whereas this, there's enough liquidity on the offer to absorb a lot of the buying pressure. And, then it comes down. It starts to grind up, comes down. So that kind of price action to me is more saying that there are sellers out there and they're happy to just sit on the offer. Sooner or later, that's going to potentially turn. And I'm not willing to sit on the offer anymore if there's a bigger position or some bigger players trying to get out, or it's just some buyers that have held it through here, saw this run up, saw this pullback, saw this grind up higher, are just wanting out. They're going to change from wanting to sit on the offer and just wait for the market to come to them to chasing the market down. But at the moment, it hasn't happened, so that's why you just got to let it run its course. But we'll see. I mean, this could just keep grinding up and start to pick up a bit of steam into $3, and then we'll just have to tighten our risk right up and see what happens. Yeah, this one at the moment, I wouldn't be tightening my risk too much. I mean, you could put it in the 201, 202 if you got in at 201 like we did, and just make sure you've got enough to cover your comms and leave it and just see what happens. Because if it comes down to 2, there's a good chance from here, if it does come down there, it's probably going to break down a bit. And that means this trend up is probably starting to fail. You'll want to start to see it lift in the next couple of days. All right, any questions there? JOT, Jat. That, I think I saw this today. I'm on the week, I'm on the daily. This here, if you can really drill it down, you can see it's the volume's lifted on this candle when it gapped up. We've come back down, essentially closed that gap there a couple of days, but then started to lift, and you can see that slightly, ever so slightly rising volume here, which is not too bad. It's getting a bit extended up here, but I think that that chart's not too bad. You had a, from left to right, started 2018, kick up, actually float. Oh, this is a long time ago. So whatever's happened here, 2018, okay, took off, pulled back, took off again, touched up to 29, and then from there, selling coming in for the next few months, right till June. We got the first sort of reaction back up. Selling kept coming in, kept cruising up. So cruising up, entering into the market. But if you look at, again, did it again, get rid of that. If you look at the steepness of that descent, it's running out of steam. So you want to see that. So obviously near vertical there, pull back again, near vertical. This descent here, this little pop up, this descent here is, that just means that you would expect, it's a reverse of what we just spoke about before. The angle of descent on ascent before on what we're talking about, triple T, is probably not as bullish as I'd like to see, and this is not as bearish as you'd like to see. It just means that maybe the sellings are starting to run out of steam. All the selling has been done, or the sellers are drying up, and the buyers are starting to soak them up. Then you get this little spike higher, which is always good to see. So it did take out the low there with this press down, but like I said, that's not convincing if you're a bear. It's more just you'll be watching that as a bull, just saying, hang on a sec, let's just see what happens. It's sort of come back into this zone here as well. What's that, 3 cent zone? Then we lifted. Okay, the next pullback we got was a higher low, and that was confirmed, this little spike up. And then we've got sellers probably jumping in a bit, a bit of whoever got in first around 4 cent mark. You're probably going to get some profit taken sooner or later, but you can see is another minor, ever so slight high low holding here at 6, and we're starting to lift off that higher level. So yeah, this one's starting to look good. I would expect it's going to start to accelerate soon, because what you see with this price action, what you're looking at, and you're trying to pick that opportune time when there's no one, like I said, no one's really on the offer there. There's not a lot of liquidity on the offer that has to get absorbed by the buyers, and they have to try to lift it. And it's just like lifting weights. The lighter they are, the easier it is to lift. Whereas if the less sellers there are on the offer there, the easier it is for the market to lift. And once it starts lifting, and you can see the buyers start to stack up, if you do look at liquidity and what do you call it, market depth, if you see the buyers starting to lift up, or sorry, pick up, and the liquidity on the buy side starting to lift, then sooner or later they're going to start jumping over each other. If the market starts to lift, they're going to, rather than buggerizing around waiting for a bit of a pullback and fine tuning your entry, especially if you think it's going to 15 or 16 cents, why would you bother? You just hit the offer and get it done, giving up a little bit of profit. But sooner or later it's going to start happening, and people are going to start, that fear of missing out, start chasing it higher. So we'll have to just keep an eye on this one. Let us know how it goes if I don't follow it there, Magna. But I want to keep an eye on this one just to see if it does play out like that. But yeah, it's looking good, especially this last few days. You got this little pop up. Go back to the 6 month. So this one lifted here, closed the gap, and started to lift again. Only slightly higher volume, but it's something to keep an eye on. If that volume really starts to kick up, like especially like that back in November, then I think this could start to lift and just spike straight up and through 10 cents and just continue on. Oh, what was the other one there? Oh, NSR, let's do that. Definite uptrend on that. I don't mind seeing that. I don't mind seeing that little pullback in conjunction with that overall uptrend. So you look at that, and when you see it down sort of those oversold territory here, it's a good turning point, continuation zone, continuation here again, down here, sort of off that oversold zone. You can see it's just, rather than just here, if you're buying just in here, it's not really oversold at all. But when you come down, it comes down a bit further, goes to that oversold. I'm not saying buy it here. I'm saying that's after that, it starts to lift. If you get an entry set up, pretty much, let's draw that. It's worth keeping an eye on. what I was saying is just the market presses down, oversold, starts to lift, goes sideways, and it consolidates through here. Always a good sign. It starts to lift and consolidate. Looking to break out through the top side. Your risk is just below. Don't have to worry too much about it being in the you know in oversold there. It's more that setup out of that oversold zone. So a lot of players, buyers have been cleaned out of this run up with this pullback. You're looking for the next run up to start. You got that run up, then you've got this pullback. That was a bit deeper, a bit bigger, a bit more how do you say constructed. Had a pullback here, popped up, deeper correction. It's probably just really continuation of that zone through there, roughly. And then from there, you've gone oversold again, built your higher low, continuation, we've lifted. So whether or not this is enough, we're oversold, what we'd be looking for here is just an entry setup, I'd say. Is looking for it potentially to do something like this, consolidate sideways and then start to lift, and then you'd be gunning for a break of those highs. Does that make sense there, Laura? Not much to talk about on that one. I think that's looking pretty good. Let's just look at the weekly just to be sure. And again, the weekly on just on a bigger picture, it's starting to look good. You know, got this pick up, pullback, good little spike higher. A lot of these buyers have been cleaned out of the market with this pullback, retest those lows. Then this was more constructive. This price action is more constructive than what we saw earlier in, say, 2016. Been more constructive, whereas it's just been holding higher levels, retesting it, retesting it again, a bit of a clean out there with that little washout, then started to lift, higher low, picked up, higher low, touched on the MAs, touching on the MAs. So here, could be in a prime position even from that weekly. It's just the only thing you really got to be cautious about is that getting up into that 195 zone, 190 to 95, where you might find the reaction lower. But look, if you've got tight, knowing that you pre-planned a trade, you look into your daily, and if the daily's looking good up here, I'd probably give it a bit of room to break and just continue. It doesn't mean it's going to react lower off that if everything's supportive of just to move through. And it's done a lot of price action through 2017 and then 18 to build. It could just build and go bang straight up and through. And that's because of what we just looked at the last few years of really building that platform or that base to work from. All right, so that's good. COB, who put that up? All right, that looks like it's as dead. The weekly's as dead as a doorknob, and the daily's nothing. I don't even need intraday, do I? Is there any news or something on Magna on this one? COB? Yeah, I wouldn't be interested in this one for a while. It's only because it's coming down to that 20 level. It's on its lows potentially. Who says it can't go lower? This could go through, 10, 20 cents easy. Could keep grinding lower. It's done nothing for the last few months. So what's another couple of months? Just sit and watch at the moment. So I just saw a jet. All right, PLS, something I looked at just a minute ago. So on the weekly, if you looked at this, if you just narrowed it down to this price action only, you'd steer clear of it. I'd even be shorting it potentially here. Not that I would, but you could short this here because it's that continuation. The market's rolling over ever so slightly, and every sort of move down is picking up steam. They do react back up again. And what I don't like from the short side anyway is the fact that it's reacting up and through. This solid reaction here is up and through the MAs. Again, you're sort of going sideways and you reacted up through, we come straight back down, we reacted straight back up and through. That's more choppiness. And it's just, to me, it's looking like it's just washing out traders at either side of the market, which you don't really want to see. You want to see more cleaner price action where it's sort of, if you're a bull, it's something's popping up, pulling back to the MAs and going again and looking for the entry from there. So this one could be the first one on the downside where, okay, potentially it's coming back to the MAs, but it did it something similar here, big spike lower, and that is capitulation. So you've got to be careful of that. You want to be short when that happens. You don't necessarily want to see that and then get in a short, because then you could be looking to you're the one getting cleaned up on a squeeze when it squeezes higher again and goes back up through the MAs, which you'd be looking up towards 80. So that's just my little spin on that short side there. Looking at that daily, I'd probably be on the bias to the downside than up for sure. But if you look to that weekly, you've got this nicer price action here. That was from 2015 through to 2016. Then you got this look, not a big fan of that price action there. But if you cut that off, and we're looking at here, you wouldn't be too bullish here. Does that make sense? That price action there, it's grinding lower. It could just keep going. You don't know. There's nothing here to say to me. You get the market's pressed up, pulled back. Struggled to get back up again. Struggled here at 60 and gone back through. Then the MAs are crossed. They keep touching on the MAs. It's still touching on the MAs. It could easily roll over there. Looking at that there, but if you go and then go look what happened, it just went bang straight up, took off. So that's a tough one to get on the right side of. I would suggest the way I trade, whereas this action would have been a lot easier, especially up towards 40 cents when it took off there and it traded up to 90, so you essentially doubled your money. Whereas this one here has gone from below the MAs, it's looking a bit negative there, and then boom, up she goes. So it could be on the weekly, it could be something similar, but I think it's got a lot of price action to do because there's big clean out here. Maybe if you draw that up, you're going to see it's sitting right on top of that trend line there. So you got this trend line here. Look, it could be just sitting on top of there, but I would expect it to do a bit of chopping around, but holding up. If you're going to be a bull, something like this, it's touched down, chops around, keeps touching down, and then a big squeeze and just squeezing out all these sellers. Sorry, that have built up through here. Sellers come in, get squeezed back out of the market. We'll have to see. I think it's got some more work to do, and because it's a weekly chart, you've got time up your sleeve there, but I think that the daily is not showing anything to me to be in and long. But it's the weekly is the one that I'm looking at just to keep an eye on. FBR on the weekly looks like the one and only thing is working for it. What I don't like is on any of these markets when they've been hammered like this. So your market's it's gone up, it's crept down. This one's looking pretty good. Took off here. I'm pretty sure we had this one at some stage. I don't know where. I can't see it at the moment. And what's happened? It's come off its high, tried to go up, and really struggled through here. And you got this big clean out of this sort of lower high level, which if you were going to go long, you'd have to wait. For me, I would have been waiting, or potentially here, get a spike up, waiting for that high low to start to build, hold up near the highs, and then look to jump in for a long, looking towards that 30 zone. Instead, it just sold off. So what's happened here, it's got belted down here. So that, to me, is cleaned out any sort of confidence. Yeah, no board, no chicken. I need to make up for Christmas expenses. Yeah, true. There's a couple there you got there, Magya. Yeah, a lot of talk about cobalt and lithium. I'll read bits and pieces, but I like to look at my charts more than anything. I think if there is talk and a sector starts heating up a bit, I think you're going to get some really good setups on a couple of particular stocks in the sector. So I think you get more than enough opportunity. This may not be one of them, but we'll see. So that's probably one thing that's sort of hovering around that zone, 7 or 8 cents. It's touched down there. It is oversold, so I wouldn't sell it, obviously, but I think because of this big belting it got through the end of the year, I'd be concerned about that. I don't know if anything's happened. There could be some news that's driven that lower, but I want to see this confirmed. I want to see a good little pickup. So you get that initial bounce off that support zone. So it has reacted off that level. There is buyers out there that are willing to support it at 8 to 9 cents. I want to see it pick up. And then again, once it's picked up, I want to see some work put in to build that high low. And then bang up she goes. If you get that high low, the very minimum you've got whatever the rally was, you can sort of extrapolate that out, and you could be looking, if we do this, say from 7 to 11, say, and then a pullback, a few cent pullback, then you could be looking at 5 or 6 cents on the upside again, 14, 15 or so. And then if you're buying it below 10, that's a good healthy little gain on it. Even if it doesn't play out and it's just you got this big sell off here, you got this two-legged move up, and it gets belted. You can still make money on that little pop. But yeah, I want to see that price action play out before I go near this one. Before I would go near this, and even the daily is not doing anything, even if it was today. But we'll see. We'll see. It's just that it's oversold. Like I say, things can stay oversold and keep going lower, and the same on the upside. You don't technically sell because it's overbought on the upside. because it could stay overbought and the market could keep going up. It's just an indicator of you might be running out of fuel on the sell side or the buy side. All right, now that was that one, FBR. That was about it, is it? We're done. We got through them. All right, any questions there, guys? We might just, is there anything else quickly that you want to have a quick look at, or we're all happy with the way it is? And I didn't move that the whole time, did I? Good move. Sorry, guys, I just realized that I didn't transition across so you can see the right-hand side of the screen. Bit of a goose, aren't I? Told you I was rusty. There you go. We're there now. So that's the last price action of that there. Yeah, I guess you saw it on the charts anyway. This sort of one here, PUR, I've got my eye on. Pretty aggressive little trade, but look at that little pickup in volume. Some good news come out. I'm expecting that to pop up through 10 if we can, but we'll see. LNG will do. So LNG actually doesn't look too bad at all. The weekly's not really anything to write home about. Let's just drive that back a bit. You can see you really want to see a higher level hold, whereas we've taken off here, come straight back down to that support zone at 40 cents. It's not technically something you want to see. You want to see it, pop up. What we've said it a few times. You want to see it pop up, consolidate at higher levels, say the 1/3, and we're talking from the move from lows to high. That was 40 to 90. What's that? 60. No, I can't add 50 cents. 50-cent rally. So say the top 15 cents, 20 to 15 cents. You want to see it hold, and if it consolidates in the first, you can only pull back about 1/3 of that move, or it has a pullback of 30% of that initial leg up. Initial leg, I'm talking this, holds around that level within that first 30%. That's a stronger market, a stronger looking market. When it comes all the way back down and pretty much makes back 100% of that leg up, then you've got to question why. Why is that a strong market? Now, maybe it's because the overall market got knocked around a bit, or maybe not. Maybe it's not ready to go yet. Just looking at that weekly, where it had a good little pop here, and then up at this level, maybe the fundamentals are not good. Maybe people are just not willing to hold it past there, and they're all back out again. And we're not talking just a few. We're looking pretty much the bulk of the people who bought it earlier are jumping back out again. Down to the daily, in saying all that, this leg is starting to curve up. So I'd ideally be looking for that higher low. It doesn't mean because we've come back down to that low at around 40 cents. We touched down on 40 previous lows, holding a higher level. That's good on a daily basis. And then if we can get a little pullback or we consolidate, chop around here for a while, then you've got a breakout of 60. You've got your stop below around 52.5, say. Great. That could be a little trade. You could just be looking up towards the next level, 75 cents or up towards 80 or so. But just bear in mind what's happening on the weekly chart. That could come crashing down fairly quickly. Does that make sense? It doesn't mean you can't make money 2 to 1, off a trade. It's just that because the weekly's not in your favor, it's just to be a bit more cautious than what you probably normally would. Anyway, I hope that makes sense there, guys. We'll probably call it a day there. Any questions, Sharon? All sounds good. I'll close down before the delay ends. No worries. All right, guys. Thanks very much for joining me. We're not going to be in on Thursday. We're going to do one once a week, just on the Mondays, just to see what's happening, have a look what happened the last week, over the weekend, and just talk about it. Just have that stream happening on Monday. So if you do have any questions during the week, feel free to send through the email to support@tradesetup.com.au, and I'll get back to you. More than happy to have a chat if I get a chance as well. So yeah, anyway, guys, thanks for joining me. Have a good week, and we'll speak to you next week. Cheers. Bye.